Why do so many investors lose money?
Maybe since the pandemic, this new generation of investors that are all about FOMOing and weird crypto meme coins and meme stocks. And you have like these new asset classes that are super risky options, right? So like, I think if you remove that from the investment class, I think if you remove those things, it's very hard to lose money.
I guess what we're seeing on our end is a lot of people making these speculative trades where they're going in and buying something because it's hyped up. They're buying at the peak and then it drops. You're like, crap, I got the wrong one. Sell, lock in a loss, move on to the next one.
Probably either one really young or relatively new to investing, okay? They're going to go through that period and it's going to be a costly short period of their life, months to a few years. They're going to learn those lessons. Sometimes like you can read all the books and you could listen to us talking about what not to do, but you just have to go through it yourself, right? And I think every investor has to go through a period of making critical mistakes because everyone wants fast money. I get that. That's the answer to your question. They're chasing fast money.
How did you make your money? Could you take us back to the beginning, like how you even got started doing something like this? Oh, sorry.
Yeah. So I mean, I've been investing since I was like 13 years old. I was like a nerdy finance kid that before that existed. Now it's common. Like now kids do this. This is like cool to be a financial hustler as a kid. Oh, not in the 80s, man. Not in the 80s and not in the 90s when I grew up. I was the only one. I was literally the only one. I tell stories about I would hang out, like kids now hang out in like boards of like amongst people that have like interest. That was my like interest was investing. And there were web boards like Yahoo web boards in the early days of Yahoo web boards for finance. And you would post a message and I'd just sit there all night and wait for someone to respond and post another message. Could you imagine?
I used to do that on aquarium forums.
You know what it's like on like StockTwits now or X when you put a message on Tesla and there's like 10,000. I would literally post a message with like my thesis. And I'd be like, here's my thesis, on this stock. And I just wait. The next morning I would wake up and the first thing I would do is pull up that message board and go, oh man, 2 people commented on my thesis. Dude, this is huge. That's how hard it was to be like in a retail investor, a self-directed investor. We didn't exist. But I was investing since I was 13. And that's why I developed this whole concept of what I call social arb investing, right? Which is, I wrote a book about it in 2010 called Laughing at Wall Street. But it's all about detecting change in the world and then connecting dots between that change and the companies that would benefit or be harmed by that change. You want to surface the change quicker than others, and then you want to connect the dots to the benefiting companies really quickly. And there are more elements to it than that. You have to make sure that the rest of the world doesn't already know about that thing that you discovered. When I say the rest of the world, I mean Wall Street and other retail investors. You want to make sure that there's nothing else happening at that company that could be more impactful than the piece of information that you think is going to impact that company positively or negatively. You also want to make sure that that information that you think is going to impact that company is actually meaningful. It's a needle mover, right? So I always tell like the same stories because they're super relatable. Stories like, 10 years ago when kids started playing with DIY slime, they would make slime in their house, right? And that became a really popular trend. And I was able to surface that trend pretty quickly when it was happening. And so I was like, oh, this is big. Like every kid in the world is making slime with their moms and in their house and playing with it. Well, like, how do you make this stuff? Oh, the primary ingredient is Elmer's glue. That's interesting. So who makes Elmer's glue? Newell Brands. Oh, they're public. Oh, that's interesting. Oh, this is a stodgy old company that grows at like 2.5% a year, and Elmer's glue is roughly 2.5% of their revenue line. Okay, so like how much are they going to grow Elmer's glue? Oh, Elmer's glue hasn't really grown in 40 years, but now it's sold out in every store around the world. Literally sold out in every single store around the world. So you have to assume they're ramping up production of Elmer's glue. So earnings were, a few weeks later, and this trend had been going on for a couple months now, or a few months, it had been ramping up. So I traded Newell Brands via stock options. And sure enough, the company had like its biggest earnings like ever in recent history because Elmer's glue sales were up, I think, like 60%, which doesn't sound like a lot, but for a company that's only growing at 2.5% a year, when you have a 2.5% revenue division that's up 60%, that's a big deal. So the stock was up 17%. Now that doesn't sound like a lot, but you have to remember that this was a stodgy company and the option premiums were like that big only because no one was trading options.
Some poor soul was probably just selling covered calls thinking he's, nothing's going to happen.
Nothing, the stock never jumps.
I'll be fine.
The stock never jumps on earnings, you know?
Someone actually bought my option.
But the story that goes all the way back to my childhood was, I was always a hustler. I would do garage sales on the weekends. Like this is way before Gary Vee was talking about garage sales. I would I would literally take the bus around the city of Dallas at like 5 a.m. I would study the sales in the newspaper the night before. I would literally study the sales, and I knew that garage sales were managed by women, older women, and they were really good at pricing jewelry and antiques and stuff like that. But any item that was male-oriented, like train sets or baseball cards or watches or like anything that was male-oriented, they just kind of discarded and didn't care about because it wasn't like up their alley. They didn't really understand it. This is pre-eBay when you didn't know what things were worth unless you had like a price list in a book and you would look it up to see what it's worth. So I would look for garage sales that listed items that were male-oriented, knowing that they were more likely to be mispriced at the estate sale or the garage sale. And I would then take the bus, and you could usually only get one sale in to be first at, because you had to be first. So I would get there at 5 a.m. and just sit outside the house until they opened up. And, sometimes I hit nothing. Sometimes I would hit stuff. I'd start every morning at the 7-Eleven. I would get Snapple flavored iced tea because it was really early in the morning. I want to wake up. I didn't drink coffee as a kid. So that was like 13, 14 years old. And one morning I walked in the 7-Eleven. They didn't have any lemon flavored Snapple iced tea, which is what I used to get. And I was like, what's going on? He's like, well, instead of having 2 full refrigerators of Snapple, this is back in the day when Snapple was everything. There was only half of one door of Snapple. He's like, there's competitors now, Arizona, other iced teas. He's like, that's all we're going to have from now on. So I went home, talked to my older brother, who's a stockbroker. I was like, can I make money on this? He's like, well, maybe. He's like, and he taught me how to short Snapple through put options, right? And so I had $300 saved up from all these garage sale trades I'd done. I gave him the $300 in cash. I said, can you do that for me? He said, yeah, I'll buy some puts on Snapple. They have earnings in a few weeks, whatever. So he bought the puts, and Snapple was one of the hottest companies in the world at the time. That was the first earnings. They missed earnings because it said inventory was building up in the channel because retailers were not giving them as much shelf space. So I was a 13, 14-year-old kid that saw something that people working on Wall Street didn't even see. And that stayed with me. I was like, how did I see that as a kid just going into 7-Eleven? How did the guys that work on Wall Street that manage billions of dollars, how did they not see that? It's just so right in front of your face. And what I realized was that people that work in the financial industry, their brains aren't tuned to like see things like that. They're focused on financials. They're focused on technicals sometimes. They're part of a herd mentality, and they all kind of live in one area of the country, or at least they did back then. Mm-hmm. They were mostly male, and they mostly thought one way. So there were lots of opportunities to see things in areas of life that they weren't really focused on, that they would miss. So the same way that I would look for male-oriented items at garage sales, I spent a lot of time in my early years trying to detect change with female-oriented trends and products and brands, or brands that were young or youthful, because an old white guy on Wall Street didn't really pay attention to things that were youthful or female or things that started trending in the middle of the country. So I remember some of my big trades from back in the day were like P.F. Chang's or Cheesecake Factory, because think about a guy who lives in Manhattan. He just never seen a P.F. Chang's. He doesn't understand the degree of buzz that was happening in places like Texas when there were people were eating Chinese food for the first time, right? Or thought they were eating Chinese food. Like, he didn't understand there was like a 3-hour wait to get in that place. They didn't understand how big of a deal that was, that they would be able to open hundreds and thousands of these places, and every one would be exactly like that with 3-hour waits. They thought it was probably a fad, but no, like people outside of these cosmopolitan regions had never had Chinese food. So it's all about, I always say it's not about being really smart. It's about being smart in a totally different way than others. That's what pays dividends.